Hey guys, good evening. It's BA here, and it is Friday evening, December 16th, 2016. And tonight, all I'm going to do is take a brief moment and update you on our portfolio status. So we're going to skim right through what we've done this week and how our portfolios stand. So let's get right to it. All right, so the first thing we're going to do is look at the trades that we closed out this week. So we've had a few, and I know I haven't really done a really good job of letting you guys know what positions I've put on this week, but I've put on several that have taken right off really quickly. So let me see if I can highlight the, yeah, you guys should be able to see that week right there. So let's just go down through those one by one, just talk about them real quickly and move on to the portfolios. So during this week, we took off a Strangle and Crude. We already talked about that. That was the loss I had in the Swing for the Fence portfolio. So took my first loss in that portfolio. And hey, it's the way it is. So that's the way it'll be. We're going to regroup and get that thing back. We're actually on track with it, with the return right now. So we're in fine shape with that loss. With a profitable trade in that Iron Condor. That was actually an Iron Condor in that trade too, guys. Let me go back here and what? There we go. Bam. Okay. Now we're tracking. I don't know why I put Strangle there. That was the Iron Condor. So, hey, if we'd have been profitable in that trade, we would have been in 4 months' time, probably pushing close to 65% return in that Swing for the Fence portfolio. So it ain't chicken feed. But as fate would have it, we took a slight loss. No issue at all. All right, so we lost 9% total on our buying power that we had used. This is a new column. No, not right here. Right here is a new column that I've added just to reflect the percentage gain on the buying power that I'm using to put these trades on, just to give you a rough order of magnitude of how profitable or these positions are, how much we lose relative to buying power. Okay, the second trade I closed out was a debit spread in Google. We had $185 tied up in that trade. We took it off for a $215 profit this week. We were in it for 27 days. It was a 116% return. All right, that's, again, guys, when we get in those tranches, in those down moves in the market, that's when we set up these debit spreads like this. And, getting triple-digit returns on those it's not that hard to do. All right, so let's see. Short calls. Yeah, I had put some short calls on in the next month out in crude. And I think I sold 10. Yeah, sold 10. Had a short move. Took them off for $300 profit in a couple hours. That's the 2% return on the equity on the buying power used. All right, next one was debit spread in Lilly. You guys know we put Lilly on. Yeah, it says here 9 December. I guess that's when I got in the trade. I went back and looked. Yeah, so 7 days in the trade. We had $200 tied up in it. Lilly was ripping hard. We made 360, so we got 180% return out of that trade right there. Okay, Lilly is a bullish play going forward. If the market gets smacked down for whatever reason and Lilly retreats, say $5 or so, hey, we just got to put that trade back on, or add to it if you're still in it. It's still got a lot of room to run to the upside. Okay, took a debit spread off that I put on in NVIDIA. We were in that trade for 29 days. Had 216 tied up in it. I pulled it out today. I miscalculated. I thought I had a double, and I was trying to do the math on my phone. It never works. So, but anyway, I pulled it off. We had an 85% return on $216 in the trade for 29 days. So anyway, that's the status of what's taken place this week in the portfolio. Hey, I'm going to be probably more active going forward. I want to take advantage of, especially if we get a sell-off in the market between now and, say, mid-January. I will get very active in this portfolio here. Stocks, futures, pairs trades, whatever it is. All right, so let's just take a snapshot, look at a snapshot of the actual portfolios. So the retirement account, we're only up 7% for the year. We were up 30-some% last Tuesday. All right, in a week, that stiff up move we had, when all of the trades I had on in this retirement account were right on the verge, and then we had the rip your face off rally over the last 7 days. So we're still up 7% for the year. We're only, just to put this in perspective, I'm only 35 points away in the S&P from this retirement account of being up 45% for the year. So if we get 35 points down in the S&P, and I know that seems like a stretch. I mean, who in their right mind could ever think the S&P at this stage could go down 35 points? It's unheard of. So, but I'm only 35 points away from a huge move up in this the return on this portfolio. I'm comfortable where it's at because I just don't think this rally, as bullish as I am, I think this rally needs to take a little breather. So unfortunately, we're going back into, well, this December's panning out like the last 30 Decembers minus last year and the year before last. This December looks like all the other Decembers I remember. Not 260 points straight up off of a November low, but bullish into December, bullish last week and a half in December. So we'll see what we get. All right, our portfolio margin account up 31%. It's really a disappointment to me, guys. I mean, I haven't been monitoring this, but a little bit less than 3 months. I'm only at 31%. You know, it's that crude trade that took me down. I had a chance, 3 days away. You know, had the big OPEC, non-OPEC countries, had they not gotten together, who knows? I was positioned, let me just say, I was positioned where I would have been up about 48, 49% in this account in less than 3 months. But, hey, I can't argue with what I've done in 2.7, so I'm happy and grateful for that. All right, swing for the fences. We're right in the kill zone, guys. It's not where I want to be. I want to be way ahead of that number right there, but, hey, got to be happy with that. All right, we're still up. I haven't put a new trade on in the large account. I will next week. I'll start sprinkling some trades in there. And then coming soon will be the small account. What I'm looking to do there, guys, is to put $5 grand into an account. And I'll probably wait until Tastyworks opens up, their brokerage firm. And I'll probably just park $5 grand in there and trade the swing for the fence portfolio in that account and just see what I can do in that account, trying to double it every year for the next 10 years. That's my objective. To stay with that strategy day in, week in, month out, year out for the next 10 years, just to see what I can do with $5 grand. I will post at some point in time. I'll post a one of those little charts that shows your compounded rate of return. If you're able to double your account every year for 10 years. So, you know, I know that's paper, but we'll see what we can do with it. Anyway, hey, that's a wrap. That's all I'm going to talk about today. I will give you the weekly recap on how the zones flushed out. I'll do that sometime this weekend. But until then, have a nice weekend, guys, and this is BA signing out.